I'd like to welcome in Ken Polcari. It's great to see you, senior market strategist at Slate Stone Wealth. Kenny, it's great to see you. I'm glad you're here. How you feel at FTC? What we're seeing?
I feel good. I actually, I like the market. I'm bullish on the market. I think this year is the market's going to, probably return to a normal range somewhere between 7 and 10%. Add in divvies, maybe it's 10 to 12%. But I think there's going to be that return to normalcy. But I think the U.S. economy feels good. I think the market might be a little bit overextended at the moment, but all that is going to do is create an opportunity. If it pulls back, we'll create an opportunity for the long-term investor.
Yeah, I know you're watching a few things, everything from the Fed, which has been somewhat easy, a strong consumer, also phase two, all of these things sort of lining up to sort of boost your positive outlook, right? I mean, when we talk about the volatility that you expect, are you saying that buying on the dips is probably the way to go?
I think you certainly shouldn't be chasing things that are hitting new highs necessarily, just because I think the market is a little bit ahead of itself. I do expect it to pull back. I don't think we're done with the coronavirus conversation, although the market yesterday and today once again appears to be kind of discounting it and pushing it to the back burner as if it's not important. I do think, that as next week and the week after, we might see that change a little bit. I think the market will back off once again as it's kind of concerned about what that's going to mean for not only the Chinese economy, but really for the global economy. That, I think, will then give the longer term investor an opportunity to get back in and, maybe take a look at some of the names and the broader market that has gotten ahead of itself. So I'm not negative. I'm just cautious in terms of some volatility in the weeks ahead.
And then did you have some thoughts on Amazon versus some of the other guys?
I have some very real thoughts on Amazon and Microsoft. And the news yesterday about, the judge kind of blocking the Jedi project and Microsoft and Amazon challenging it and trying to, raise all the concerns about the process not being fair. Look, there were a range of names that were involved in that process. Everyone got eliminated along the way for one reason or another. And ultimately, when Microsoft was awarded the contract, 2 months ago or something, immediately you saw Amazon stand up and, stamp its feet and claim that the process wasn't fair, and they got shut out as if it was expected, or that it was just a fait accompli that they were going to be the ones to get awarded. Look, the way I feel about it is, I think both companies are great. I think both companies have a lot to offer. I think it's an opportunity for Microsoft. I think Amazon does a ton of work already for the U.S. government. And so I kind of also wonder, do we want to put all our eggs in one basket? Do we want Amazon really being the one provider for the U.S. government? Where does that leave the government? Where does that kind of leave Americans, all dependent upon one? So I'm certainly in the Microsoft camp that I hope that ultimately the judge sees it for what it is and continues to award Microsoft the contract. I think Amazon certainly does enough on its own and certainly have enough exposure in the system. And I wish that would just stop and allow that Jedi system to be developed, certainly because the country needs it and the military needs it.
Understood. So when you talk about cloud and all things cloud, I mean, when you look at the group, I mean, there's a lot of competition in the space, right?
There's a lot of competition in the space. And listen, there were a number of those names that were in that race. And for one reason or another, they all got eliminated. But look, the cloud space isn't going anywhere. It is certainly a space that people should have as part of their portfolios, or certain names in that tech sector, that cloud space is part of your portfolios, because it's only going to be more cloud as we move ahead in the years ahead. And so the space, I think, is fine. This conversation you and I are having is about that specific issue over the government contract that was awarded.
Yeah, and that was a really big deal, and it has been a big deal, and it continues to be obviously a hot topic. I wanted to change gears here and look at Home Depot, which you're watching. You don't say it's a strong buy; it's sort of a hold at this time. I know you like it maybe on a pullback. I will say Wells Fargo raised their price target up to $265. I think they may be the highest in the street now, up from $240. What do you think about a name like this?
Listen, I like Home Depot. We like Home Depot, right? It's in the space that we like. I just think that the stock is a little bit ahead of itself. And I think that, listen, we own it, so we're participating. So it's not like we've missed the boat. We do own it. It is a holding. So as the stock moves higher, it's great. All right. So we are participating. I just would be slow, and this is me, I would be slow necessarily chasing it here. I understand guys are raising their targets, but we've got a whole year to go. And like I said, I think we've got some volatility ahead, and that may actually cause the broader market and then pull some of these names back with it. Then I think that's when you consider either initiating or adding to the existing position. That's all I'm saying. I like the name. Yeah. I like the stock. I just think it's knocking its head right at the highs. I think you can be a little bit patient, especially if you already own it.
Right. So by the end of the year, I mean, Dow 30,000 you think is a shoo-in, right? By the end of the year, where are we? We're higher, 7% for the year? Is that what you're sort of guessing?
Listen,
Something like that?
I think the market, let's talk round numbers. I think the market's probably going to be 10%, going to return 10%. If you add in dividends, maybe it's 10 to 12%. But that's where I think the market's going to be, across the board. So the broader, the S&P, the Dows might trail just a little bit, just because the S&P is clearly a broader index, as you and I both know, and so there's more opportunity to participate there in terms of versus just the Dow 30 names. But yes, I think my sense is that's kind of where we're going to be at year end.
Yeah, and I know you have financial names, Citigroup, JP Morgan, Bank of America, the Industrials, Union Pacific, United Technologies, GE. Those are some of the names that are on the slate stone wall there, right?
Yeah, they are. And but listen, those names are all great, but JP Morgan certainly is the one at the top of that list. I mean, it's almost hard not to fall in love with JP Morgan. The job that Jamie Dimon has done with them consistently, quarter after quarter after quarter. He's methodical. He's well thought. Listen, they all are, but I think JP Morgan, out of all those names, happens to be my favorite. But the group as a group in general, we like.
And what about Fiserv? Quickly.
Fiserv is another name, right? In that Fiserv and FIS are also names that we like, and they're in a place right now where if you want to start chipping away, they're not at their highs. They backed off a little bit, and so those are names that certainly in the space we like, and that provide an opportunity. Certainly, once again on a pullback, but they are in a place right now where they pulled back a little bit. So if you want to stick your toe in the water, go right ahead.
All right. Great to see you, my friend. Kenny Polcari, Senior Market Strategist there in Florida at Slate Stone Wealth. Thanks, Kenny. Great to be on with you.